Welcome to episode 1 of Wake Up. Now I know what you're thinking. Here's another douchebag with a Bitcoin shirt that's gonna make his own YouTube channel because he loves the sound of his voice and he's gonna tell us all about how great Bitcoin is. You're partially right. I called it the Wake Up podcast because I want to talk about things that I find important, whether it's Bitcoin, money, personal sovereignty, privacy, all these sorts of things that I think most of the world is either ignorant to, oblivious to, or they're just asleep at the wheel, hence the name. So I'm going to try and do one of these shows weekly, hopefully, if not weekly, at least fortnightly, and try and build up just the content base for new people to come in, because I feel like I might have a way to explain Bitcoin and some more of these complex concepts a little bit better. And hey, guess what? There's a bunch of idiots out there anyway who are running podcasts and they're influencers talking crap and they really don't make any sense. So maybe I can balance it out. I'm going to take the video from Dan Tapiero and Raoul Pal, I think I'm pronouncing that right, from Real Vision that they did about 2-3 weeks ago, where they spoke a lot about Bitcoin. I think it was a great video. I think there was a couple areas where we were dangerously moving into shitcoinery and some just really, I guess, diluted or unclear narratives around Bitcoin and how it's evolved and all that sort of stuff. So again, my thing here is not to sound arrogant. I really do this from a place of wanting to add some value, but I do hope this video adds some value. Please forgive me if I'm ranty at points. This is a long video. This is the first time I've done this. Hopefully it'll get sharper and I'll really tighten the videos as we go. I'm going to try to do some long form ones, some short form ones. Might even do some interviews. We'll try a whole bunch of things. But at the end of the day, we're going to talk about things that, like I said, people are asleep to, and in the process, hopefully wake some people the fuck up. Without further ado, I hope you enjoy episode 1. Thanks again for listening.
One of my key ideas is that within this recession scenario that I think is building, that gold and Bitcoin are going to be two of the assets that perform extremely well because they become options on a more extreme monetary policy.
Let's just start with the opening statement. So I think Raoul's largely correct. I just don't know whether I agree that at this point in time, Bitcoin will be considered a safe haven asset broadly, and whether, should we hit a recession, this proverbial recession that's been coming for like decades now.
Dan, finally we get you back. Your kind of previous videos were kind of cult watching for a lot of people because you're one of the pure macro guys, and I was doing this whole thought process about recession and bits and pieces, and I've been thinking that Bitcoin was part of what I'm looking at within that framework, and you and I separately have been talking about it, and you'd been kind of hounding me from about February onwards to say, Conrad, you've got to get back into this. Before we get into your thought process and how you've kind of applied your own macro framework into building your Bitcoin thesis, it's just people should, because many people won't have seen you from the earlier interviews, just to go back over some of your background. And the reason that I like to pick your brains on stuff is you have a background almost unparalleled from anybody I know. I mean, you've worked with the greats of the industry, whether it was Julian Robertson at Tiger, whether it was Stan Druckenmiller, whether it was Steinhardt, whether it was Jacob Rothschild, whether it was Stevie Cohen. I mean, the list is kind of endless. And you get all their perspectives from working and seeing how they all trade. You're also a bit of an entrepreneur. I mean, you started a gold business, which was a crazy idea when you started it. But now, it's a really interesting Gold Bullion International. GBI is a really interesting business. You even started, I think, the largest farming real estate business in the world with Stan Druckenmiller and managed to punt it onto the Canadian pension system. I think it's now resold to Bill Gates, I think it is. Your perspective is just kind of extraordinary. And I know, and that's why I trust you. You're a macro guy through and through. You live and breathe this stuff. And when you start hounding me by email every day almost saying, Raoul, you've got Bitcoin. Okay, what the fuck's going on?
Yeah. Well, thanks for that intro. Yeah, I know we haven't over the years talked that much about Bitcoin.
No.
You're one of the guys who back in 13, 14, I think, put it on the map, at least for the macro community. I mean, you were very bullish very early. And I was also involved early through GBI. We had, in 2014, integrated with the Uphold platform, which allowed clients to buy and sell Ripple and Bitcoin, to buy and sell physical gold as well as other metals. And so that was a whole year-long integration. And going through that process, I realized, wow, this is something. It could be big, or the company is going to make revenues. And unfortunately, what happened was that it started well, but it never really became a big revenue driver.
Again, my contention is that Bitcoin's life cycle and the emergence of Bitcoin as an asset and as a money is really important to understand. And I think the reason people didn't do anything with it back then is fundamentally because it was early, so you don't have volume. Number two is in the early days, and we're still very much in the early days. We're still in the phase where Bitcoin is fundamentally still a collectible. This is sort of the phase we're in at the moment. Is kind of like people collecting gold 5,000-10,000 years ago, before anybody knew what the hell it was valued at, before society had a consensus around this object or this good is a functional form of money. So you're not going to use it as money at that point in time. So it was missing the volume, and also it's really, really early in the life cycle. There's my 2 cents there.
The physical gold company then also moved into other areas, I guess, within crypto. And even today, I think we just launched, I think it's there are only 2 places where one can buy Bitcoin in one's IRA. And we partnered with Equity Trust.
Wow.
And now through Equity Trust, you have the ability to buy actually more than just Bitcoin, but some of the other crypto as well. So, it's been part of our DNA a little bit.
All right, I wasn't going to say anything here, but about 4 minutes 35, you can buy other cryptos in this IRA. I think that's a really, really bad idea. We'll go into that a little bit later, but let's just flag the idea of putting money into multiple cryptos as being a crazy thing to do. It's deranged. You're not getting any benefit out of doing that. All you're doing is you're increasing your risk on an asset that is fundamentally more volatile anyway. So I think, and I mean, this is just a blanket rule. If you're going to be investing in crypto, and I hate even referring to Bitcoin as a crypto, but if you're going to be doing that, you just do Bitcoin and Bitcoin only. You don't screw around with other cryptos, because all you're going to do is increase effectively your leverage and your volatility. Really, really stupid idea.
Also, the guys, there are other macro guys of my vintage who moved into crypto.
You introduced me to Dan
I know.
Moorhead, right?
And Dan Moorhead. And, there's Nova Gratz and John Burbank. And so sort of the smartest guys, the best guys my age, all moved into crypto. And so there's something going on. And, I did my reading, I did my work, but I never really quite committed to the concept. And I think that so I was dancing around it, but I never did the deep dive that would give me the confidence. And then in 17, of course, you see it running, but at 2,000 or 3,000, you decided to sell your position. So I'm thinking, there's no way I can buy here.
Because you were at that round table when we started getting feedback from the guys who were very early adopters.
Oh, yeah. Yeah.
From Chad, from Emil, sorry.
Yes, that's right.
He's like, we need to be a little bit cautious here.
Right.
Rocketed.
Right. So, I missed it, and that's fair. But earlier in the year, February, March, as you had said, Bitcoin was down 85% from the high. And, as an old-time macro guy, you're looking to buy things that have gone down 85, 90% after a blow-off. And it's binary then. Either it's a bankruptcy or a fraud, or that's the bottom. And so I said, okay, here's a chance. I don't think it's a fraud. I'm going to buy some. And so that started a process of deep digging and research. And I And I probably in that period, and that was when I was shooting you because I needed some confirmation.
I can't focus on this. I'm looking at the recession coming up. You're like Bitcoin.
Right, and I understood that, and I'm sort of with you on that. But that started a process. I probably spent 400 to 500 hours reading, listening to podcasts. There's some really excellent work out there now available. That wasn't 5 years ago, in terms of explaining, what is Bitcoin? What is this, phenomena? What is it? And, what I come to see is that almost every person has a slightly different definition for what Bitcoin is. And I think that that's contributed to making it very difficult to adopt easily. And so what do I mean by that? So I thought, okay, let's get down to the very essence of this. Yes, I understand digital payments, store of value. I'm reading all this stuff. But what Bitcoin really is that white paper. And you go back and you read this thing, and I don't understand even half of it. But what you realize is that this is a great invention. It's not a coin. It's a system, right? It's not, a blockchain, and and maybe it's an invention akin to, the motor engine or the invention of electricity. It's something, potentially a new organizing principle for humanity.
So between 720 and 820, Dan's talking about, the multiple narratives and the confusion in the space being one of the hindrances for people getting in. And whilst this is true, I think this is a normal part. This is actually a feature of an emergent money, because fundamentally most people don't understand what money is. And for Bitcoin to really, really be robust, it needs to go through this storming and forming phase where the narratives are misunderstood by some and better understood by others. In fact, that's actually where the opportunity lies, because the more people that actually fundamentally misunderstand it, the more opportunity those who do understand it have to actually acquire this asset. So that's sort of number one. But the other things that he's talking about in there is he wants to get to the essence of what Bitcoin is. And I like how he goes, it's not a blockchain. So well done, Dan. That was actually really good. He said it's also not a coin. Now, look, it's not a coin in the sense of the term coin that's come up and that's evolved, with all of this ridiculous ICO fiasco that has popped up. But it is a coin in the sense that it is money. So yes, it is this system and it is this invention. And the monetary aspect and the unit, the scarce digital unit that is a part of this system is inextricably linked to the system itself, and you cannot separate those two. But 100% on the right track here. Bitcoin is a much broader recipe, and I mean it's far more profound than anything sort of we understand today. And I think as this phenomena evolves, we're gonna be redefining it the whole time, and we're going to be broadening its definition over the coming decades and potentially over the coming centuries. So yes, it's an invention akin to the automobile, probably orders of magnitude more profound than the automobile. So let's continue. He goes, new organizing principle. Sorry, I had to add that in there. Absolutely. So what Bitcoin has done for the first time in history, it's created a prospering of the commons. Traditionally, when human beings have had a common resource, we've raped and pillaged it because the game theory is such that you want to look after yourself first. It's the selfish gene of self-preservation, etc. So what Bitcoin's done is it's taken that and created a system which actually gets stronger and better for the whole whilst everyone is working in their own self-interest. And that organizing principle is really where the one of Bitcoin's most extraordinary aspects is that thing right there.
Part of the problem was that people, when they start really digging into Bitcoin, they end up saying these kinds of things, which, you know, really puts everyone off, because you're thinking, well, this is a, you know, madman changing the world, all of this stuff. But, you know, so as a macro guy, I come at it, macro investor, I'm thinking, well, what's the value of it? What's it worth? The difficulty I always had was trying to put a value on it. I need to know what I think it's worth today and what I think it'll be worth in 3, 4, 5 years, and have a proper, proper framework. Mm-hmm. And I found that very difficult, you know, in 14, even, you know, listening to some of our contemporaries talk about it. I didn't quite get it. It's because Bitcoin is a lot of things. So what it is it's an invention. And I think it should be referred to as an invention rather than all the other things. It's what it really is it's a truth machine. It's a way, in a way, to eradicate all fraud or, you know, lying by human beings. I mean, the whole, you know, bigger concept of certainty, of confirmation, of validity, of security. That's what you're buying, a system that, you know, now is 10 years old, has a tremendous track record. And I'm thinking, well, what's that worth? What is a security platform like that, with that track record? What is that? What's the value of that?
So around 9 minutes, he starts talking about how to value Bitcoin, and that, you know, it was really hard to value in 2014. And look, I agree. I don't think many people really knew how to value it. There was a small few people who actually realized that this was a monetary phenomenon and not just some new company or, you know, some new trinket or some new technology, as people like to frame it. So, you know, he talks about the challenge of applying a mental model or a framework around valuing Bitcoin, and this is difficult because, like he says, it's fundamentally a new invention, and you know, if we're going to define an invention as a 0 to 1 innovation, if I'm going to steal from Peter Thiel there, you can't use mental models of the past to really try and value this, particularly when you take mental models from frameworks that don't apply. So a lot of people in this space, and, you know, a lot of the Ethereum lunatics do this, is trying to take mental models from tech, from Silicon Valley, from, you know, companies, from businesses, and trying to apply it to valuing Bitcoin. And that's crazy, because that is not what Bitcoin represents. The closest mental model that I can find, and the closest framework that I can find to try and value this thing is, you know, what is a monetary system? What's the weight of a monetary system? What's the weight of what's the economic weight of a new system of money? You know, how big is that? And if you want to start comparing it, like if you look at the money supply in a country like Australia, we've got 25-30 million people, and we've got a money supply of something like 3.54 trillion USD worth of Australian dollars. You know, gold having a market capitalization of 8 trillion, the US dollar having some sort of market capitalization of 20, 30, God knows how many trillions there. That is a far better mental model when trying to understand what Bitcoin's potential upside is. Bitcoin exists as this immutable digital network with a verifiably scarce unit supply, and exists to help us create a monetary system that is actually fixed. Now, that is a very, very, very big deal. So when we look at it, you know, as a monetary phenomenon, you start to realize the gravity and the size of what Bitcoin actually is, versus trying to compare it to, you know, companies, or even what Dan's going to talk about at the 10-minute mark, which is this whole truth machine thing. I think he's read that the Truth Machine book, you know, by, I don't know what are those guys, Mike Casey and Paul Vigna, one too many times. You know, the blockchain is the truth machine. You know, number one, blockchain is just garbage. So let's just set that out as the first thing here. You know, just because Bitcoin decides to use some form of effectively timestamping in its architecture, doesn't mean that the blockchain is the special part of Bitcoin. That is an ingredient of a much broader recipe. So that book in itself is madness. But let's not diminish Bitcoin by calling it a truth machine. Yes, it does represent a digital network that you cannot reverse. And when something goes in there, you can go back and query and point to that. But that doesn't really predicate truth. So let's continue, because I want to dive deeper into some of his points here.
And I think back in the early days, you know, it was very hard to get a sense. You know, you have something that has a $3 billion market cap. You know, who cares from my perspective? You know, it would have been great to have bought it at $10 or $50, but I think that really was the realm of the VC. You know, I never would have had that kind of vision, you know, the Tim Draper early vision.
So at 10:30 he mentions buying it at $10, $20 was the realm of the VC. Potentially. I think it was really the realm of a particular type of VC, which was the VC has already been exposed to libertarian-like thoughts and a background that understands the mental models in that framework. So I think, and it's evident by the people who held it in the early days. They held it for a specific reason. So I think that's important to understand.
It was just, I remember going down to Barry's office, Silbert, in 2013, 14, and he says, "Oh, Dan, you know, we have this product and we're trading, you know, like $2 million a day." And I thought, you know, $2 million a day, I mean, that's not, you know, that's not anything. It's not a store of value. It's not anything.
I want to separate store of value from price, because this is one of the biggest misunderstood concepts around Bitcoin. When people talk about store of value, people run around and say, "Oh, you know, Bitcoin's price goes up and down. How's that a store of value?" So let's separate the two. Being able to store value requires knowing what your attribution of the whole is. You can store value in that which is finite and cannot be diluted. You know, the opposite of store of value is value evaporating. And when value evaporates, you're being diluted. You know, inflation predicates the opposite of a store of value. So Bitcoin's the ultimate store of value because it's one of the only things in the world that we know is truly finite. You know, land is similar, time is similar, and you know, so is art, for example, from somebody who's died. You know, it's fundamentally finite. You're not going to get more of that from the painter. So, to be clear, Bitcoin's price has nothing to do with its store of value property. Absolutely zero. Bitcoin's price is just a function of how many people currently understand what the hell Bitcoin is, and that understanding is broadly poor at best. And in the early days, it was only understood by a few people. And that was reflected in its price. Because, you know, how many people decide to, like, if you look at Bitcoin's price in the early days and its market capitalization was just a reflection of how many people actually understood this and how many of them were willing to store capital or wealth on this network. So, in other words, Bitcoin's price today is simply a function of how many people understand what it is, what a store of value means, and more broadly what money is. And that is very, very few people in the world. But it is growing, and particularly with respect to this generation being about the separation of money and state. This is the zeitgeist of our generation. This is the theme that's growing. One small caveat, maybe in 2013, the protocol hadn't ossified enough, so one could argue that back then, Bitcoin may not have been a store of value. It was primarily speculative, and that's largely true. But by and large, particularly how Bitcoin formed and evolved, has been around being this fixed supply, good unit asset, whatever label you want to give it. And as a result, being fixed in supply makes it the ultimate store of value. Being something you cannot make more of makes it the ultimate store of value. It's a really important concept to understand.
So that's just from my perspective. And again, just given where I was coming from, would have been hard to really grasp, to be all in. White paper, it just all was completely different, a new language. And also you had the fraud component and Mt. Gox and all of this, and really in the first 5 years. Yeah. So that kept away, I would say, traditional macro people, but also just people in general. I think that kept people away from it and said, oh, I don't have to bother with it. But for me, it was, I don't really understand how to value it. So here I am, I'm going back in the beginning part of this year, and I'm thinking, okay, it's gone down 85, 90%. I know it's real. How do I value it? So what's this security truth machine worth, right? So
security truth machine.
That's what it is.
Yeah.
I think it's a security truth machine. And the Bitcoin really is just the reward that the miners get for guaranteeing the security of the framework, of the network. That's what it is. Now, if you think about what would it cost for a company to build that?
So around 12 minutes, Dan puts his definition up again about a security truth machine, which Raoul seemed to like. Again, whilst that sounds nice, I believe that's the mechanism that helps us. It's the mechanism that helps make Bitcoin a superior form of money. So, calling it a security truth machine, allows for us to get confused and start thinking about things like, oh, what else can we use a security truth machine for? Oh, look, how about we put everything on the blockchain? And then we start going and creating stupidities like Ethereum and start trying to create blockchains for everything. So I think it's a dangerous way to define Bitcoin. Furthermore, I don't know what truth machine actually means outside of being able to query something that had happened in the past, or being able to query and verify and validate that this is how much Bitcoin is actually on the network, and this is my attribution of that, and as a result be able to derive properties such as store of value from it. So I don't know if that's an adequate description of what Bitcoin is, or whether it's even a good description, or a description that'll end up sending you astray. So it's my 2 cents there about the security truth machine.
If that belonged to one person, it's hundreds of billions of dollars.
And this is why Bitcoin's not a security truth machine, because that's when you can start asking questions like that, and that's when you have the rise of the Vitalik Buterins of the world, who think that they can create a security truth machine to be a world computer so that everything in the world can be on the blockchain. And again, that's crazy thinking, because that's not what Bitcoin is, and you cannot build Bitcoin. So nobody can go and build Bitcoin. And Satoshi disappearing and handing it over to the people and the participants, and Bitcoin being fundamentally owned by every participant, whether it's holders, whether it's miners, whether it's node operators, whether it's speculators, whether it's whoever. Everyone is an owner, everyone has some form of skin in the game. That is not something that a company or a single person or somebody can build. Much to the disappointment of all the shitcoiners out there who've gone and created their own blockchains, which are supposedly superior to Bitcoin. Bitcoin's power, Bitcoin's profoundness comes from the fact that nobody actually owns this. Nobody can actually go and build this. Amazon, no matter how many resources they have, cannot go and build this. The US government, China, nobody can go out and build a, quote unquote security truth machine. They cannot go and build a emergent form of money that is owned by the participants and owned by the market. That is what Bitcoin actually is, not some security truth machine that somebody could potentially build and then sell to somebody as a service. And that's why I think it's really dangerous to define it like that. When I say dangerous, I'm saying that tongue in cheek because nothing's going to happen to you except you might just get wrecked going and buying Ethereum. So that's an important concept to understand. And actually, I'll tie it back to the valuation framework, because again, if you try and value Bitcoin in that framework, you're going to start thinking about it as a company or a product or a service that somebody could potentially build and sell to you, which is again not the right way to view Bitcoin or to try and value it in your mind. Onwards.
Think about all the man hours. Think about all the people who volunteered their time. What is that worth, all of that time?
That's a really interesting thing, because you and I know the sheer amount of intellectual capital, programming capital, the amount of people working on this space is unbelievable. I've never seen anything like it.
Yeah, I think it's, and I'm really just sticking to Bitcoin for the moment.
Even within Bitcoin, the amount of development and intellectual capital that's involved is huge.
The guys are spot on here is, but this is also a function of the fact that it's not just some truth machine, run by someone. That this is a function of the fact that we're reinventing money, and a money that's owned by the people. So as a result, you've got an entire community. It's becoming much larger, the community. You've got participants from all around the world volunteering and building on this, because whilst they own it, they also don't own it. That they own potentially their attribution to it, but nobody actually owns this, and that's why Bitcoin is so powerful. And that's why, I was on a podcast the other week with Adam Meister, I think it was, and I was just talking about how, because this is fundamentally the people's money. You have raving fans and lunatics. Look at this. I'm doing a freaking video and I'm wearing a shirt about Bitcoin, volunteering my time and effort to talk about Bitcoin, because I'm a participant of something greater here. Companies like Apple, who supposedly, and they have raving fan customers. They have people who love their brand and love what they stand for all around. They would fucking die to have people as fervent and as fervently in favor and as fervently supportive of their product as we are of Bitcoin. But that's because Bitcoin is not a product. Bitcoin represents something so much more profound, which is our time, our effort, our labor in a measurable form, and for the first time in a form that's also unconfiscatable, uninflatable, and uncompromisable. So I think that is just one of the really profound things about Bitcoin, and why it's just so far outside of the scope of trying to measure it as potentially a company, product, or service, and defining it as this truth machine. So yeah, the guys are spot on here about the intellectual capital, and all that intellectual capital really is in and around Bitcoin. A lot of the other intellectual capital, unfortunately, is being wasted on intellectual sophistry, trying to build shit that, and trying to frame the Bitcoin recipe in ways that just don't matter. Shitcoining I'm talking about.
Over these years, like, what would it cost to build that? It's truly a massive endeavor, something that can touch every single human being on the planet. All they need is a phone. I mean, it's kind of an incredible, could a company even develop that?
He's absolutely spot on there, because they can't. That's why Bitcoin is not a company. And I love when you hear people talk about, I saw a meme the other day, is, Bitcoin will never be worth more than $10 a share. Again, just completely missing what Bitcoin actually is. So Dan's spot on there.
Or maybe Satoshi realized it could only be developed slowly over time in a decentralized way, because the current, the structure of the way a corporation works could never work fast enough.
So at 13 minutes and 30 seconds, so a corporation is fundamentally owned by someone. If we're building, if the intent of Satoshi and the intent of what Bitcoin is to build a money owned by the people, it fundamentally can't be owned. And Satoshi getting it out into the wild and spreading it and pushing it out the way he did was literally perfect. There could not have been a better way to bootstrap and set out into the wild a money that was to be one day owned by the people, that emerged from the market, that is fundamentally not something that a corporation or a company or a government can actually do, because that's not what we're doing.
This thing is going 24/7. Not just the trading of it, but the maintaining of the system and all the mining that's going on. It's constant. Part of the problem, I think, in the early days is that it's hard to really believe as an investor that someone invented something unique and gave it to the world for free. And so it was valued at zero in the beginning. If it had been within a normal company structure, it would have grown to some degree, and you would have had an IPO, and maybe it would have been worth more than WeWork, which is 50 billion, or I don't even know how you compare it. But I'm just saying that I think it took a while to adopt, because it didn't make sense that if you had done this early digging and you had realized the nature of the invention early, to think that this could be worth trillions of dollars, it was too far, I think, a stretch. Yeah. Not for the VC people, maybe, not for the private equity people, not for the technologists, I think, who got in earlier, and then maybe not for the smart macro guys who we've mentioned, who are actually also in. You can get to numbers very reasonably that are, the Winklevoss number is a million on Bitcoin, and Draper's 250,000. Within 5 to 8 years, there's, you can start to see it, because you say, okay, well, Amazon, that's worth $1 trillion. It sells stuff on the internet. But is that as valuable as a new invention for humanity?
One is a business, fundamentally, that produces, that adds value to society. The other thing is the way we actually the way we measure the value that's added in society. So one is whilst Amazon is an incredible business, and adds incredible value in the world, the other thing is the thing via which we measure value in a manner that is incorruptible, and that is far bigger, because the notion there is that there will be more than just Amazon who's looking to add value, produce value, and measure value in this world, and more broadly speaking, when we're in freaking Mars or wherever the fuck else we're going to go.
That is applicable to almost everything we do.
But most people don't see that. Can you talk a bit about
Right.
that?
So I think the and
Because they just think most people are still stuck with, well, somebody's created something that they claim has value, and
Right.
there's a lot of the naysayers would say that. But you're saying something so huge.
Yeah.
Explain a bit about the hugeness.
Yeah, I think, and this is part of the problem and the hurdle for Bitcoin, is that it takes so much work and so much digging. I mean, of every piece I've read, I probably only understand, in the beginning 30% and 50%, and then, maybe 70%. I still can't understand the details of the white paper. However, I've spoken with people, in one case a founder of PayPal, in another case a genius cryptographer, and they all say that it's genius. And so what's behind the genius? He solved the Byzantine generals problem. And so that problem had not been solved ever. People have been trying to solve
Explain
that
that
problem. So that's the problem of trust, not having a central authority verify a communication between you and I. So having a third party that we both trust verify our interaction.
Yeah.
Okay, so it was very difficult to figure out a mechanism to build a solution to that problem with a real world application. And so what's something worth? Again, the macro guy, what's something worth that solves a problem that they haven't been able to solve for hundreds of years? And the reason is that it's so multidisciplinary. It's financial, it involves cryptography and computer science.
The reason that wasn't able to be created before was because we hadn't solved that Byzantine generals problem. And in solving that, we were able to release, we, and you know what, I will say we, because this is functionally what Bitcoin is. Now, Satoshi was able to release something into the wild that we then as a community picked up and carried forward, that would become, what is now a $250 billion collective savings account that less than 0.1% of the population of the world actually understand, and it's growing at a rate that nothing else in the world can catch it. So I think what Dan's talking about between that 15 and 17 minutes is really, really spot on. And definitely on the right path. And I also just want to commend his humility here. Is he's putting his hand up, saying that look, despite how much digging you really do here, it's really, really hard to understand because Bitcoin is just so multidisciplinary. It is this amalgamation of so many disparate disciplines, and if you haven't been exposed to a broad range of things like that, you will have trouble grasping the actual depth and the breadth of what Bitcoin represents. So if you are learning about this Bitcoin thing and trying to find out more, the more broadly read and the more broadly curious you are, the better with respect to Bitcoin.
And to be honest, I don't think Bitcoin would have been invented without '08, because in '08 the trust was lost.
I think Bitcoin's release around 2008, and my guess is it was intentionally timed. Like Dan Held wrote a beautiful series called Planting Bitcoin, and the timing around 2008 and releasing Bitcoin into the wild at that point in time was literally the epitome of timing perfection, and makes you wonder whether this was done by somebody who came back from the future or some crazy shit like that.
The banks basically failed and they were saved, and there were people who were saved that shouldn't have been saved. Now, my response to that crisis was, okay, unfortunately backward looking, being a historian myself, I'm going to create a gold company, physical gold company, where that stores gold outside the banking system, that is fully allocated, where you have your name on it. And in a way, that was my
that was your macro bet.
Right. That was my solution to
a broken system.
Right. I need a way. I want to have some allocation to that because I'm concerned about that. I mean, I'm not in the realm of the technical genius to solve a math problem that hasn't been solved for hundreds of years, to turn that into a functioning system with incentives. I mean, that's part of this.
It's like behavioral economics is all rolled into this.
That's right. So how do you get someone to maintain the integrity of the system? How do you get millions of people and millions of bits of energy? I mean, using all of this energy, how do you convince someone or a decentralized group to say, hey, we're all going to work towards the security of this new platform?
Bitcoin is the most raw, pure, natural capitalist entity that exists because it fundamentally rewards people or participants for working in their own self-interest. And in the process, and in doing so, working for the collective interest and the collective strength, robustness, and anti-fragility, if we're going to use that word, for the network as a whole. And that's what's fundamental. And that's why the incentive mechanism in Bitcoin is so important. That's where all the blockchain people who, go about talking, we want to know about the technology, not the Bitcoin, the currency part, because that's just, speculation and gambling. We're interested in the technology part. Man, that kind of bullshit just shows how little some of these blockchainers actually understand the phenomenon that is Bitcoin and what we've actually created here with this thing, or what has been created here with this Bitcoin thing. So Dan's touching on it here, and it's really good to see him sort of scraping that area. Is Bitcoin fundamentally incentivizes everybody to work for the collective good whilst working in their own self-interest, and that is profound. That was what I mentioned earlier in the prospering of the commons, which is a big part of the innovation that Bitcoin is, and why it's so fundamentally robust. Our inherent desire to survive is linked. It's related to this whole selfish gene concept, and the desire to do what's right for ourselves, primarily. It's a phenomenal concept. So back to the video, let's continue.
How do you come up with that? Well, there's real math behind that. And so this is a mathematical solution to the trust problem created by '08. So, right? And so again, GBI, my company, I figured in Octo 08, I had the idea, and we launched in March '09. The white paper came out in March '09, and then had a very, unfortunately, it was way over my head. But of course, that was the right macro response to the crisis, which also makes me think that Satoshi had a very advanced sense of the macro.
So at 1930, 19 minutes 30, he's talking about how Bitcoin was the right macro response to the spirit of the times in 2008, 2009, and how that gave him a sense, or that gives Dan a sense, that Satoshi had a much broader understanding of what was actually going on, and that's spot on. It wasn't by accident that Bitcoin was released when it was released, and it wasn't by accident. It didn't just come about, in the couple months prior to the GFC. There's no fluke here, and there's no coincidence here. So he's spot on.
Because it was only our crowd that talked a lot about fiat. Fiat currency and gold and, debasing of the currency through quantitative easing and negative interest rates. Well, of course, so we all thought, oh yeah, gold, right? But for someone to have understood sort of that deep macro problem, as well as all of the computer science and cryptographic aspects, I mean, that does not exist in any person who I knew. I mean, so now all of a sudden you hear every Tom, Dick, and Harry on Bitcoin on Twitter, Bitcoin talking about fiat this, and I don't want my fiat that, and it's 10 years later, but it used to really just belong in the realm of the macro.
That's
so
right.
It's really a phenomenal person or a group of people who brought all of these pieces together. And so Bitcoin people are like, well, okay, Dan, that's obvious. We knew that 10 years ago. You're not saying anything new to us. And I'm like, yes, I know. But for the macro community and for investors at large, institutional investors as well, and they're way behind, they need a language to understand what Bitcoin is. They need, it's so confusing when you listen to these different people, often there's a lot of hype. Even like, Antonopoulos, who's written his 2 books. I read the last one recently. It's a brilliant book, but you have to really go through it. You have to pull things out of it. You have to constantly be upgrading your knowledge because it's also evolving and there's constant innovation. But as I said, every person describes it differently.
It's because it's an entire system. It's an entire architecture, infrastructure, and system all combined. So it has attributes of many things.
Right. That's exactly
What
right.
is society? It's like asking philosophical questions. It's actually a philosophical question. What is Bitcoin?
A good friend of mine, one of the greatest Bitcoiners around, Huss McCook, we were having a chat, I think it was like, earlier this year, and he was just, he made a really interesting point, which is you can't separate politics, philosophy, and economics, and you can't. And what Bitcoin represents is not just a monetary and economic system; it is also a philosophy. It is fundamentally also a system of politics / governance, because it is this system that somehow achieves consensus amongst participants who aren't related or don't know each other. So you can't separate those things, and really understanding Bitcoin, requires a level of, it requires you to appreciate the, philosophy around Bitcoin, and that philosophy is broad, low time preference, just patience, time, life, biology, all of these, what is society, as Raoul mentions, during his little rant there, is Bitcoin is profound for all of those reasons because it inherently links all those things together. And, granted, some people get all foo-foo about that shit and start to talk about fairy dust and, everything else. And then they take a bit of meth and turn into I'm going to put the image on the screen, and go down random rabbit holes. So there's a sensibility around how profound it is, but yeah, to the guy's point there, it fundamentally is not just an economic and monetary system, but it is a shift in philosophy. Super important to understand.
And that's hard for people who are looking for cash flow or EBITDA or whatever it is to value. Macro guys value things all the time that have no cash flow. Gold is one. Bonds now certainly have negative cash flow.
Yeah.
I don't know who could buy bonds. But anyway, the point is that, this isn't just valuing something with no specific cash flow right now. But, in the future, there might be. I mean, it might be that at some point, there's so many places that it could go, and I'm not the right guy to start throwing out the possibilities and all the use cases. I'm trying to think of, what is this platform worth? And I think eventually part of the value is that, it is, if it need be, traceable back to somebody somehow. And, we've seen this. We've seen with, the FBI, if they think that there's, some fraud or something, they can, not in all cases, but they can go back. Physical gold, it's more difficult. My only point is that gold, it's a hedge in the traditional system, for the traditional system. stocks and most people who are long stocks and bonds, gold is a good hedge. And now with rates close to zero, if we go through this thing where U.S. 2 years are going back down to 2%, you don't have a real hedge. It's not clear to me that Bitcoin acts as that hedge. It can, but what I'm trying to say is that Bitcoin really is something much bigger than that. And to just, be comparing it or, gold and Bitcoin are cousins. They're both alternative currencies.
Of Bitcoin, yeah.
Right. The value part, the part that trades on the screen, they're alternative currencies, right? That one little part of Bitcoin. Bitcoin really is massive. So I'm not sure why everyone is comparing, Bitcoin to digital gold. Maybe they think it's an easy way to, for people to understand it.
All right, so about 23 minutes 30, we're talking about Bitcoin and the digital gold narrative. I don't know. I've had agreements with this, disagreements with this, and I've sort of, I've been more on the side of likening it to gold, not because it's like gold, but because gold was the best form of money that we've had because it had some inherent attributes that made it useful money. And likewise, Bitcoin is a monetary phenomenon. And in that sense, gold is a nice mental model via which to describe Bitcoin. Gold is one of those objects on the planet that is fundamentally scarce, finite by definition on the planet. Not that we can probably get to all of it, but I think the digital gold narrative is actually useful, and it's a good shortcut mental model to quickly and easily describe Bitcoin, particularly to those who already appreciate gold. And I think Dan mentions in here about the gold bugs are the cousins of Bitcoin, and in a sense they are, because they were the ones talking about fiat and inflation and all that sort of garbage. Well, it's not garbage, all of that sort of stuff for the last 10, 20, 30, 40, 50 years. And funnily enough, they've been waiting on, did a tweet a little while ago, that they've been waiting for gold to go to the moon, and Bitcoin comes out and gets to the moon, gets out of the solar system, and is on the way to the next galaxy, whilst the gold bugs are still here trying to build a fucking raft, because the world's evolved and it's moved on, and what Bitcoin represents is just a far superior form of money whose nearest corollary that is broadly understood is gold. So I think that analogy still stands, and I think it's useful as a shortcut. But it's, to Dan's point, it's definitely not, it's nowhere near broad enough to really describe what Bitcoin is. But I think we should keep the mental model.
But it's not an easy way. It confuses it. I think if it were presented as this invention of a new system, and if it were articulated in the right way, I think it would make adoption easier and quicker. And so this leads me to, think the greatest need in the Bitcoin community, again, from a macro guy perspective, not, someone who's involved, nitty gritty. The leaders in the area need to either come together. Is it Coin Center, which is the advocate in DC?
Right.
Maybe each of them have to put in $5 million into a pot, and they have to, develop a proper marketing and educational plan. And I think this is important in DC as well, because, this is something that the U.S. is going to be a huge growth mechanism. I think potentially could create a huge number of jobs. And right now, they're antagonistic people in the leadership. I think a lot of people, they haven't done all this work, and they're listening to these little bits of information from different people, and they have the wrong idea. And so an education marketing mechanism funded by, these guys are making a fortune now, I think is the way to build something that removes the general hostility from at least the politicians here and maybe some of the central bankers. Once they realize what it is, I think they should actually create tax incentives to get people to buy in.
I couldn't disagree more on this path. I think this is one of those dangerous concepts and dangerous notions and dangerous ideas based on mental models that exist in the current infrastructure, i.e. thinking that that Bitcoin has or needs leaders, first of all, which it doesn't, and it doesn't need. Number two, thinking that we should put together a marketing plan or an educational plan to sort of officially define or describe what Bitcoin is. That is the worst possible thing we can do for Bitcoin. The whole messiness around describing and defining Bitcoin is not only where all the opportunity is, because if everybody actually understood what Bitcoin was and there was one place where you could go to sort of figure that out, Bitcoin would already be priced. The day that everybody actually understands what Bitcoin is the day Bitcoin's worth 50, 80, 100 million USD in USD terms, which at that point US dollars is going to be worth nothing, likely. So that's by definition has to emerge. By definition, an emergent market money, the narrative and the story and the understanding of what it is needs to emerge and needs to achieve consensus through a manner that is not delivered by some central authority or by a group of leaders like Coin Center who decide to put together an educational marketing plan. That's the kind of shit that morons like the ICO fucking peddlers and the Ethereum junkies want to do, because they've got their little consensus thing and they're going to shill and pump and dump stupidity that makes no sense. And we've seen how that turned out. Bitcoin's never had a marketing budget. Bitcoin is marketed and brought to the world by the participants who are in there because they've got skin in the game, because they understand how profound this thing is. So that grassroots, decentralized type of spread is exactly how Bitcoin needs to spread, because it is an emergent money. It's an emergent phenomena, and it is the most robust way for people to understand Bitcoin. This messiness that we're experiencing with morons like Roger Ver coming out and running his stupid narrative about babies are dying, having that messiness actually makes Bitcoin more robust, because then people can start to identify and understand what it's not. Because if you look at, let's just look at Bitcoin Cash for an example. That idiot thinking that babies are dying is the reason why we need Bitcoin, and whatever other stupid idea Roger has, is a perfect example of why we don't need a spokesperson, why we don't need some sort of deity or leader in the space to try and define within their limited mental fucking framework what Bitcoin actually is. So I think that is definitely not what we need to do. Furthermore, doing that in DC is again pointless. Who really gives a shit? By separating money and state, which is what the game for Bitcoin is, we're actually minimizing what DC can and should do. And in fact, there's a really good saying out there, which is, and I can't remember where I'm getting this from, but it's like, if America leaves the internet tomorrow, the internet don't give a shit, right? It's the same with Bitcoin. Bitcoin doesn't need you. You need it much more than it needs you. And likewise, Bitcoin doesn't need DC. It doesn't need DC's approval. It doesn't need their, babying. Bitcoin is robust and orders of magnitude more powerful than the US, than China, than all of those guys combined. So it doesn't need them. You know, if the US wants to take advantage of this, it's not, you know, the advantage is not going to come by, you know, creating bullshit tax incentives or anything like that. Where it's going to come is if the US starts to buy some fucking Bitcoin and starts to basically collateralize the US dollar if it wants with Bitcoin, then hey, guess what? It's going to actually bring some strength to that currency, and people might actually start trusting it again, because then it's not entirely by fiat. And then, you know, who knows, at some point the US might want to, if they're smart, drop the US dollar and adopt Bitcoin as the money that it uses. In fact, I believe the country, the city-states, or the nation, or whatever that looks like in the future, whatever those pockets and communities look like, those who adopt Bitcoin as the monetary standard are going to be the leaders of the next generation. Because as we've seen all throughout history, when the debasement commences, and one day when it comes time to pay the piper and the whole thing falls over, you know, whether through poor central management or just the debasement of the resource that allows society to function, i.e. money, when that happens and it all falls apart, the next thing emerges. And Bitcoin's already started, and those who choose to adopt it as the standard are going to win the next race. So to sum this little piece up, is we don't need the leaders to come together and do shit. We need this scrappy, everyone is entitled to their fucking opinion, and we need to converge upon the most sensical, objectively, I guess, most objective facts around what Bitcoin is and what it represents at this point in time, and how that evolves over time, versus some centrally managed marketing plan and educational plan. And furthermore, we don't need DC. We don't need any government for that matter. In fact, the governments need Bitcoin more than it needs them. And if they're smart, what they're going to do is they're going to remove the fucking red tape from people trying to operate in and around Bitcoin, and they're going to start putting some of their own skin in the game.
Somehow, whether it's buying a little Bitcoin, whether it's they could make, you remember Amazon for the first 15 years of its existence, there was no state tax. There was no state or local tax on purchases. It was a gift. The first $10,000 of Bitcoin purchases should be tax-free, or something like that. Because this is as I said, it's a whole framework that is hard to understand. I think owning a little bit makes it easier. And look, I haven't even talked about all the tremendous work that's going on underneath and above Bitcoin. Underneath, I mean, Ethereum and all these other ICOs. There are tremendous projects.
Oh, God. All right, so at about 2630, he starts talking about all the tremendous work that's going on underneath and around and above Bitcoin and all that sort of stuff. Now, I agree with above Bitcoin if we're going to be talking about a vertical stack on top of Bitcoin. There is no tremendous work going on in Ethereum or ICOs or any of the shitcoinery that's happening on and around Bitcoin. That stuff is just noise. Bitcoin is about patience, and Bitcoin is this temporal evolution of money, which is going to take time. And I can guarantee you, along that path, we are going to have periods of stupidity over and over again. The last stupidity was the ICO boom, fueled on and around the stupidity that is Ethereum. Prior to that, we had the Litecoins and the Aurora coins, and that sort of generation of stupidity of people who thought they could make a better Bitcoin. There is no innovation going on there, and let's take it from a macro perspective and defining Bitcoin as it is this monetary phenomenon. Money is defined as this resource, as this representation of value. And by definition, it needs to be the most liquid thing, because you are trading other goods and services against it. So money sucks up all the liquidity, and within a particular jurisdiction, so for example, let's just take the US, you don't have 10 different US dollars, because that is not a functional way for that jurisdiction or that society to function, because the exchange rates and all that sort of stuff create friction. So what happens is that the best one out of those 12 US dollars is going to be the one that absorbs all of the liquidity, and the others die off, and then all of the capital, liquidity, and depth goes into one, and then it becomes an efficient form of money, with in capacity as whether it's store of value, medium exchange, or unit of account. So money is a convergent network, and all of this stuff that's happening, the innovation here is Bitcoin, and the innovation is the emergence of a new money, the emergence of a new monetary network, settlement network, and monetary unit. All of the other crap, the other alts, the other shit coins, the other stuff that's being built, of that there might be 1 or 2% of good ideas that will at some stage be built on layers that are abstracted off the Bitcoin base layer. But to think that what's happening there is somehow going to be parallel or compete with Bitcoin itself is just crazy, because Bitcoin will suck all the air out of the room. It'll suck all the liquidity out of those things, because they are fundamentally currencies, and they just don't have the liquidity to compete, nor do they have the primitives that Bitcoin has, i.e. how it was launched, the initial grassroots growth of Bitcoin, the fact that Bitcoin is fundamentally owned by the people with no founder, the timing at which it was launched, its focus on first principles and primitives and around being fixed supply, censorship resistant, all of that sort of stuff that Bitcoin has, nobody can replicate. You cannot replicate the last 11 years that Bitcoin just went through, particularly not with some sort of deity running the show, as we have, for example, in Ethereum with Vitalik, or as you have in that fucking scam coin EOS with Dan Larimer, or any other stupidity for that matter. So there is nothing else interesting going on. And I say that as a blanket term. There might be some interesting things going on, whilst those people might still be deranged enough to think that building their own blockchain is going to be better. Or there might actually be some interesting stuff going on that is building on current networks, because Bitcoin hasn't evolved to the point at which you'd like to build on top of it. And that's fine. There will come the time, because Bitcoin will not deviate from the path that it's on, and the path that it's on at the moment is the emergence of a self-sovereign, non-state issued monetary network and unit that is unconfiscatable, uncompromisable, and uninflatable. And that's what's important, and that's the first game that we need to win. Everything else will build on top of that later. So that's my rant for that section, because I just really think it's dangerous to start thinking and taking the Bitcoin's narrative and what it represents and starting to apply it to all of the other garbage that's going on in the space. Because you're just going to send yourself down the wrong fucking path.
There are 100 exchanges. I mean, this ecosystem, as they like to call it, but I think it's sort of more of a macro system.
I think it's a whole parallel system, financial system and everything else. I just think it's a whole parallel system being built in front of our eyes, the one that we've all been asking for.
Correct.
Raoul nails it at 2650. It's this entire parallel system. That's what Bitcoin is. This is what the Peter Thiels of the world mean by a 0 to 1 innovation, or what Dan's sort of referring to as an invention. Bitcoin is unlike anything that existed ever before. It's completely brand new, so it's incompatible with what exists today, and it's powerful enough and it's strong enough to be able to operate outside of the system and have an entire ecosystem, macroeconomic system, be built on and around it. that is why this thing is so profound. That's why it's the ultimate opt-out. We don't need the existing system to make Bitcoin work. Bitcoin works because it is a system in and of itself. And it's the first time we've been able to have a system that is economic, that operates in and of itself, outside of what is already existing. And that is such a profound thing, and that is why most people can't fathom how Bitcoin could be so big. So let's continue on.
There's a lot of people still too cynical to realize what is going on in front of everybody's eyes, which is Plan B is rapidly becoming Plan A.
Yeah, but I don't think it necessarily that they're cynical or necessarily that it's Plan B. It's the future.
Yes.
Meaning, and some people are resistant to the future, and others aren't. I mean, like take Tim Draper. He's a very smart guy. He was very successful before Bitcoin, and I almost think, he's so enthusiastic that it maybe puts people off.
He was on Real Vision, and the same thing.
But he's phenomenal.
He was too enthusiastic, and people were like, well, I don't know.
No, but I know, but he's phenomenal. He's right. It's just, getting the message across in an organized way would really help. And for me, I mean, I hear Tim Draper.
How do you do that with a decentralized system, right? It's decentralized by nature. So,
well, I think so. This is.
So maybe the interesting thing is this development that everybody's going off in different directions, and that in itself is creating the whole much larger than if everyone was organized in one particular way.
Yeah. So around 28 minutes, I think Raoul just again nails it, and Dan concurs, which is the interesting thing here is this is a decentralized system, which the message is not coming from one person where it's some one unified cohesive message. It's that it is so dispersed and so messy, and it somehow still ends up converging, much like the actual network itself converges. That makes it so powerful and robust. So spot on there.
Yeah, no, I agree, and I think that's better. I mean, I think that's, and that's the robustness of this platform, is that it is decentralized and that it can't be shut down by anyone in one jurisdiction. But look, I'm an American, we're here in America. I think it's a great country, and I would want us to take advantage of it.
Yeah.
Right, and I think we could be the leaders, easily be the leaders in it, and if the government got behind it a little bit. Now, I know this is like a heresy for the Bitcoin crowd, but it would be nice for the average guy on the street, who's at 60% equity and 40% in bonds and has his savings all locked up in these things, to not just educate him, but really even incentivize him to expand his brain a little bit.
The incentive for Bitcoin today, and this is why it's such a it's so profound, the issuance schedule, how it was released to the world, and this inherent volatility at this point in time. Like the function of an emergent asset in the early days is to be this really volatile, high growth, boom bust cycle type asset, because that draws people in. And guess what the incentive is? The incentive is getting 100x, 1000x, 10,000x, or millions x on your investment. That is the incentive, and that incentive exists for those who are brave enough to go out there and do that. And that incentive exists across anything that is fundamentally capitalist in nature. Is the incentive during the gold rush in the 1800s was to go fucking out there and dig for gold. Likewise with the black gold rush, i.e. oil, and any other technological advancement. You go into uncharted territories, and that's what Bitcoin is by definition. And trying to soften that, through some sort of, government-led or leader-led cohort, with a sanitized message, to bring people to Bitcoin, in a safe manner and all that sort of stuff, defeats the purpose of this being an emergent asset, which is inherently misunderstood by people at this point in time, and requires people to actually dig through and understand it, because the point in time when everyone really gets it, uses it, and understands it, they're not going to be getting it to the depth that it is in 20 years' time, for example. And at that point, a lot of that price discovery and growth will have already happened. So the opportunity today exists, and the incentive today exists in the form of appreciation of the asset, and I mean price appreciation in terms of US dollar terms. So that exists, and I think that's perfect right now for those who aren't too fucking lazy, that want to sit in stocks and bonds and are too ignorant to actually really dig in to what this is. So I think that's perfect.
You're saying, okay, the one bet that you can have is Bitcoin.
Yeah.
But what do you think of, therefore, these other parallel universes? They're all part of the same digitization of the world, which is why I wrote that big GMI article this month about it, about digitization of all assets, and therefore the value of everything is digital now.
The digitization of the world has been happening for a couple hundred years, and particularly more so over the last 30, 40 years with the emergence of the internet. The digitization of assets has also been around. I mean, when you're trading on your Interactive Brokers account, it's digital. You're not walking up to the New York Stock Exchange in person and swapping ticker tape. The stuff's already digital. There's nothing new here by throwing the word crypto or blockchain around and thinking we've created something special that hasn't existed before. So you don't want to confuse the narrative of on and around Bitcoin and the emergence of a new money, which is this convergent network effect. Money is this thing that's going to suck up the liquidity out of everything else and is going to converge to unity. You don't want to confuse that with shit like the digitization of the world. All this other stuff that's going on at the periphery of Bitcoin is all fundamentally noise. In the same way as the information superhighway or AOL were noise along the path of development for the internet, which is the internet is this global, open, public communications network, which granted has a few flaws, but it was fundamentally the thing that wasn't owned specifically by anyone. It was the dark horse that nobody thought was going to succeed. But it succeeded because it was open. So coming back to these narratives, is the game here with Bitcoin is about the creation of the money of the people. The big picture here is the separation of money and state. That is the fight here. Trying to throw in narratives that come from old mental models or come from mental models that are from parallel universes, i.e. the Silicon Valley mental model, which is digitizing products and services and building digital companies so that you can disrupt and sell services and make revenue and do all that sort of stuff. They're all valid mental models, but in a completely different universe. Trying to take that and apply it onto Bitcoin or anything that's happening on the periphery is just going to take you down paths that make no fucking sense. And you're going to confuse yourself to think there's something there. And long term, you're just going to end up learning the hard way that the emperor's got no clothes, or that all the scammers and stupid people who are running around there thinking that there's something else more important than the separation of money and state, which is fundamentally the most important thing that's happening here. You're going to realize that they were just selling you fool's gold and making a sucker out of you. So it's not the path you want to go down. It's a very naive and dangerous mental model to use. Particularly, digitization of the world. The world's already pretty much digital. What we're doing is we're creating a new form of money, and with Bitcoin is the creation of digital scarcity and digital immutability. That's what's important, not the cliche digitization of the world.
And this is the architecture for all of that. So what do you think about, how do you think about that world of Ethereum and all these gazillion other currencies, tokens. I mean, so we're trying to figure this all out, right?
I think there's tremendous value. I mean, I think if you're new to the space and you want to get involved, Wences, the Zappo, I mean, he wrote this piece 3-4 months ago that was brilliant. He says, put 1% of your net worth into Bitcoin. If it goes to zero, whatever. If not, I think he almost said at one point, this was a few years ago even, it was irresponsible not to have 1% of your portfolio in Bitcoin. And again, I think you should have a lot more, but that's a good way to begin to think about it.
I wholeheartedly agree with that. I think, it is fundamentally now riskier to not hold any Bitcoin than it is to hold some Bitcoin. And depending on, I don't think it's as much about your risk propensity, or your aversion to risk. I think it's more about your depth of understanding of what Bitcoin represents and the shift, the paradigm shift that is happening on a global scale right now, which will relate back to how much of your net worth you want to hold in Bitcoin. So yeah, totally agree with the guys there on that point. Now, where I think they might be going with this is, to hold, if you're going to allocate, a couple percent to crypto, primarily do Bitcoin and then sort of speculate on these other things. There's just no point in doing that. Like, all of the other stuff is trending towards zero against Bitcoin because Bitcoin is sucking liquidity right out of those things. If you want to blindly gamble and hopefully get lucky on some shitcoin pumping and giving you alpha on Bitcoin, or giving you beating Bitcoin, you've got better odds closing your eyes and going and playing roulette at the casino versus picking one of the myriad shitcoins to try and beat Bitcoin's returns. That's my humble opinion. You may think differently, but that's what I think wholeheartedly here.
The other person that's also involved in this is Mark Hart. Mark's always a good thinker
Mark,
as well.
Yeah, and I listened to your interviews with Mark in 2017. He was right on.
Yeah.
Everyone creates, because it's so hard to define in one sentence, everyone says, well, Bitcoin is like this. It's like the rails for the world. Or Bitcoin is like gold and Litecoin is like silver. They're trying, we're still trying to define it, and I think there are lots of opportunities, but I don't think that, unless you're going to do a lot of work and you're going to be able to do as much work as, someone who spends their entire life on it. I don't think you go in and, just buy Bitcoin Gold or or chain, or any of Monero. I mean, there are a lot of valid enterprises, but I think you can just stick to Bitcoin as an entry because, that's the innovation, the invention. These other things, but look, Ethereum is, again, I'm not the right guy to talk about this, but I mean, it's programmable.
So really interesting. So around 36 minutes 45, Dan's talking about, people, you don't have the time to go and dig in and try and understand all this sort of stuff. So as an entry, Bitcoin is the right thing to do, etc. And look, Dan is, he's basically 90% of the way there. Bitcoin's not just the entry. Bitcoin is the is the game. Going into all the other crap. So he called them valid enterprises. So again, and I'm just nitpicking here. So Dan, if you're watching this, apologies. I'm not doing this to be an arrogant asshole, but these aren't enterprises. These are fundamentally currencies and monies. And fundamentally, they're all working in the domain of, the digital realm. And again, fundamentally, because money is this convergent phenomenon, that the liquidity is just going to be sucked out of all these other things. you mentioned at about 37 minutes and 16 seconds or whatever it is, about Ethereum being programmable. Well, I mean, so is Bitcoin. Bitcoin was fundamentally programmable. The difference between Bitcoin and Ethereum is that Ethereum is, Turing complete and, designed to be programmed by monkeys, and as a result, you can't program shit on it without crap going missing. So, Ethereum misses the foundation of what's required for a monetary system to operate first, which is the robustness, the security, the verifiability, the fixed supply, and the uncensorable nature of what a monetary system should be. But they've gone and optimized for you to be able to build stupid programs on there so that you can sell you and your friends supposedly unique crypto kitties, which they're not unique. So again, the emperor has no clothes in that realm.
You could do lots of things. The second layer at the conference, I heard there was a guy talking about how there's the Lightning system, which increases the speed.
Straight after that, you touch on the Lightning Network. Well done. So that is where the game is. So just to give you some clarity here, and for anyone listening to this, is Ethereum and all this other stuff is going to be made obsolete by the layers being built on top of Bitcoin, because each layer will anchor into something that they'll be able to ground into the benefit that Bitcoin represents with, or that offers with, digital immutability and digital scarcity. Off that, we can build abstracted layers that optimize for different things, like throughput, like other complexities that we might want, programmable complexities, without having to compromise the digital security, immutability, and scarcity of this underlying system. That's how this thing is going to grow, not by going and optimizing for stuff that should happen up here, down here at the base layer, which is the fundamental fallacy and mistake that everybody else has made, that Bitcoin has managed to not make, because it's so robust and because it manages to get this convergence of opinion and decision, because everybody has skin in the game. Again, fundamentally profound.
Transactions of Bitcoin, but also that you can build a settlement feature into the second layer above Bitcoin. Now, I'm not sure exactly what he meant, but I listened to the presentation and I listened to it again, and I took it to mean that, okay, well, Bitcoin has more flexibility than at least some of the naysayers. There are a lot of naysayers out there say, oh, it's too slow, it's too clunky. Again, that's part of its strength, the solidity.
So at about 38 minutes, he talks about how his interpretation of what that Lightning Network presentation was saying is that Bitcoin may be more flexible, or we may be able to solve those what the naysayers are saying about Bitcoin being too slow, too clunky, and all that sort of shit, through these abstracted layers. So Dan, if you're listening again, your intuition is spot on here. You follow that with part of Bitcoin's strength is that solidity, that ossification of the rules and the consensus rules that it represents. You're 100% spot on, and go with that gut feeling, because that is that right there. Again, digital immutability, security, and scarcity is the innovation that Bitcoin provided for the purpose of separating money and state and creating a instrument or a good through which we can measure value accurately in society. Those things, that's the puzzle there. Trying to take that and apply it to shit that doesn't matter, and compromising elements of that, is just intellectual sophistry. So all the other crap, again, just doesn't matter. And your intuition here about Bitcoin's strength is 100% spot on.
And that as time goes on, it becomes more and more secure, and the price of securing that network goes up in value more and more. It's almost exponential, right?
Because it is exponential. It has been exponential all the way through.
That's right. And so I want to get back to the value thing for a second,
yes,
just because
I want to come back to
because
that
you
as well.
say, so what can this thing be worth? And it's now $200 billion in market cap, but that's kind of small. You know, it's kind of small if you just see what's been built. Like, you know, it would cost more than $200 billion to build that, right? So you can start to think that, you know, within 10 years, the Winklevoss $1 million or Draper's $250,000 in the next few years, it's not unreasonable.
So I like how between 38 and 39 minutes, Dan's talking about, he touches on Bitcoin's recursive network effects, which is as more capital comes onto the network, the incentive to secure the network increases. As that incentive increases, the network becomes more secure, which further increases the incentive to store value and wealth on there because the system is stronger, and that's this self-reinforcing loop. And that's one of Bitcoin's most powerful things. And then furthermore, he goes in and he talks about how, what would it cost, to rebuild this? And I mean, again, nobody can actually put a price tag on that. But if you actually look at the sheer cost of the infrastructure on and around Bitcoin, valuing its market capitalization at 200 billion, and again, I'm playing with valuation mental models here in a weird way, but looking at it as a network with a $200 billion market capitalization does fundamentally seem light. When you start to consider how much is being built on and around this, it's almost like asking, what is the actual internet worth when you look at all of the companies, the infrastructure, the value, and the fact that basically everything today, effectively runs on the internet. Like, what is the value of that? It's really hard to pinpoint. Bitcoin's doing that, and I would argue to a greater degree than what the internet did, because it's fundamentally the unit through which we're going to actually measure that stuff. So Dan, spot on here again.
And so what is the bet? The bet is to buy and to do nothing else. That's it.
38.50 around there. So what is the bet? The bet is to buy and do nothing else. Game, set, match. That's what you want to do with Bitcoin at this point in time, is you want to buy it and you want to sit on the shit. You don't want to give it to anybody. You are collecting the scarcest fungible resource on the face of the planet and possibly the universe. Buy it, hold it, sit on it. Wait until everybody else on the planet realizes what the fuck this thing is worth. At which point, you are going to be, handsomely rewarded.
Unless you're going to be involved in like a fund business and you're going to be trading and this and that. But I don't even think I think that's not really needed.
So you become the holder, in the classic.
Yeah.
Oh, God.
I know.
I can't believe I'm hearing this from you.
I know. I can't believe it myself because I wasn't here 6 months ago.
No, I know. I mean, you were interested, but you weren't.
I was interested, but when, as it was only the price went down so much that I thought, okay, now I can have some way to figure out my risk reward, but then I bought it.
I just love this part. So just before 40 minutes, so Dan's become a hodler. Power to you, bro. Like this is the realization, and you just nailed it in the sense that you don't need to go and trade this and try and get alpha on top of Bitcoin, because just buy it and hold the shit. Go out and live your life. Go do whatever you want to do out there in the world that you enjoy doing, and then just go and take your earnings and convert it into Bitcoin. Or if you can, earn in Bitcoin, because the upside is just so fundamentally extraordinary. You don't have to try and beat it. You just increase your risk by trying to trade, because this asset has so much upside at this point in time because of just the inherent asymmetry and contrarian nature of it, that nobody else really understands how to value this monetary asset, and we're not going to understand. We're going to converge upon this over decades to come. So there's so much room for the upside that just buying and holding is fundamentally your best strategy. And then in the future, spending it or doing whatever the hell else you want to do with it in the future. You know, if you want to, it's just this part of the video makes me really happy, and just seeing another hodler come into the ranks and really reinforcing that narrative.
5,000, 6,000, 7,000, 8,000. I mean, if it can go to that number and I'm going to hold for 10 years, then, you know, even here, you can buy, but you have to be, and look, everyone is saying, oh, well, but you have to be willing to risk for it to go to zero.
Not anymore.
Well, you see, and that I remember even reading Dan Moorhead, who was in the Wall Street Journal. It was either January 18 or December 17. And he said it's a new technology, but you know, you have to be prepared that it could go to zero. And I thought, that always stuck in my head. And then as it kept going down, and then you see all the businesses forming and all the infrastructure building, and you do all the work, I don't think it can't go to zero. And he probably would say that now too. In fact, maybe there's some superior system that comes down the road. But this has a 10-year track record of proving that it's a bulletproof security truth machine.
So the tail end of the interview is actually my favorite part, because Dan, if you're listening to this, man, you are spot on. Like your intuition around and your perception around Bitcoin being, it's not going to zero. It's been around for 10 years. The track record, is solid. It's continued to grow. Like if there was a time that Bitcoin was going to fall over, that time's already come and gone. We're well past that. And just your position about holding it and it being an allocation that you just should have. And that you shouldn't worry about the day-to-day movements of the noise is absolutely perfect. So, like I said, I think the closing 20 minutes of this interview are spot on. So I'm just going to go and cherry pick a couple of those pieces that I think the listeners just need to reinforce as this is what's important.
Right? And so that's totally new. And what's that worth? Well, Draper and Winklevoss and those guys.
The other one I've been interested in, I talked to you about it the other day, was I came across this guy, Plan B, on Twitter, this $100 trillion. And what he did was a stock flow model. Again, I couldn't understand any of his mathematics. Really clever. Yeah. I'm going to get him on Real Vision because I'll do it anonymously. He's based in Amsterdam, don't know who the hell he is. But it's like everybody's been struggling with a valuation tool.
Raoul brings up Plan B. Shout out to $1 trillion USD, Plan B. Nice. I think the quant stuff that you did there, man, is sort of really permeated into the psyche, particularly of a lot of these macro guys. So spot on. Anyone who hasn't read any of that Plan B stuff yet, jump on it. It's off the charts, man. It's really good.
Yeah. And this guy, an anonymous guy, middle of nowhere, just dumps this complex maths and go, okay, here's how gold works in a stock flow model, and here's silver because it's industrial, puts it on a linear regression and shows you that Bitcoin is operating on an exponential increasing level like gold. I'm like, holy shit, this is super clever, because it's even clever for valuing gold. He's kind of solved the valuation of gold problem in the whole equation without even thinking about it, just by solving the Bitcoin valuation.
That's a good point.
So from him, using the exponential log scale of where he's going, he's like, okay, the next halving, because of what that does for the number of coins.
Yes.
He goes, okay, the next halving is 100,000. And it's like, before you know it, this thing is worth $100 trillion. But get this, that's worth $100 trillion when the mining stops, i.e. they've mined all the Bitcoin. After that, what's it worth? Because then it's an entire system in itself. Because at $100 trillion, okay, you've got an entire...
Well, what's the total world money supply? people often
This is Mark Hart's
use it. No,
argument.
I think it's 80 trillion or something. Or
Not
total
sure.
world wealth.
Cool. So around 42 minutes, Dan and Raoul start comparing, Bitcoin's, potential market capitalization to the existing money supply. And perfect. This is sort of what I mentioned before. That is the best mental model you can look at, because, again, if we look at, let's just think about the market for money. Again, money is this tool for measuring the total value that society, represents. We need to measure it somehow. And yes, whilst there's $80 trillion worth of money in the system at the moment, and probably a couple quadrillion worth when you count the value of each of the assets and everything. What that tells you is that can you apply that valuation metric on a monetary asset? Of course, it's just a measuring tool, and you need to try and separate that out from looking at Bitcoin as this investment grade asset that you're trying to buy for the purpose of earning more dollars on the other end. No, what you want to do is you're trying to gain territory and trying to earn and own as much of the Bitcoin territory as you can, because when we start pricing everything against Bitcoin, you start to have a situation where you own a disproportionate amount, which is where you want to get to. That's the whole game here. So can Bitcoin be measured against the mental model where the total monetary base? I think long term, absolutely. I think long term we are going to be measuring global production specifically. I'm not talking about GDP, I'm actually talking about real production and value in the global economy. We'll be measuring that stuff in Bitcoin. So you want to get your hands on as much of that as you can, because nobody else is measuring in Bitcoin at the moment, and that's the edge that you have.
I think people are trying to compare to those numbers. Look, I don't know that you can do that, but it seems to me that, money supply is just dollars or currency in the system. That's not that ingenious.
No.
So you can get to those crazy numbers, but I don't see, there's too much time that I think it will take. Let's say it takes 10 years. There's so many innovations and changes and things that'll happen in 10 years.
Yeah, that's not macro timeline. That's VC timeline.
I think you can, and there are lots of, I didn't talk about them, but there are lots of ways to value Bitcoin that are just internal to its own ecosystem like that, without taking it outside and saying, what's this invention worth in the history and scope of, the last 100 years or whatever it is. I think there are thousands and thousands of people doing work on this. That's the power of it. It's, normally you'd have, the 10 smart guys at 10 different brokerages or something doing interesting macroeconomic work.
There's thousands and thousands and thousands of people working on this Bitcoin stuff. Like I said earlier, there's lunatics like me spending their weekends doing videos and doing podcasts and all this sort of stuff. The sheer volume of mind share that Bitcoin's capturing, companies would die for this shit. This is a cumulative effect, and that's just one of the other network effects that Bitcoin has that makes it stronger, that makes it better, etc. And again, that's also a convergent network effect, because the best people are going to go to where the best stuff is.
You literally have thousands of people, thinking about this all over the world. Amsterdam, you have this interesting company, BitPesa, doing payments in Africa, and that's a whole other, thing. And, there's so many applications. We haven't talked about this at all. And some of them are there now, and some of them aren't, and some make money, and some don't. But the scope, so now here you go. Now I say, it's bigger than anything we've ever seen. And so the problem is you say things like that,
but it's like describing the internet back in the 80s, right? It's very difficult to describe.
Well, so I had the thought, it wasn't my thought, I read it somewhere, that someone said, the internet was created, not created, it was, the uptake, the usage, and who would have thought that, the number one thing that the internet is used for is watching cat videos and streaming video. And he said, well, wouldn't it be interesting if the internet was just sort of the base for allowing the Bitcoin framework to exist. That in the end, the function of the internet will have been to sustain and maintain the Bitcoin world, the invention of this new system.
My favorite thing that Dan said throughout this interview, or whether like the HODL thing was better, but yeah, the idea that the internet was created, not for fucking cat videos, but the internet was that prerequisite that we needed to build because we needed Bitcoin. Like the big picture was Bitcoin. We just needed, this sort of foundational piece here called the internet in order to do it. That's really profound, and that makes you start to really realize how big this thing could be, because the internet was big. I think Bitcoin's going to be much bigger, and I think what Dan and Raoul touched on there is really good. And it was actually unexpected for me. I didn't expect that to come out of a podcast like this, so kudos to you boys. That was really, really good.
And so that maybe, years from now we'll be saying, well, that's of course why the internet was invented. Or not invented, that was the use case for the internet, was Bitcoin, not,
Everything
streaming.
Else is peripheral.
Yeah, selling stuff online, like, oh my gosh, we could have figured that out, right? Amazon, right? Maybe, and I think, it's not a crazy argument.
So I'm worried about the global economy, and you and I have talked about it as well.
Yeah.
I know where you stand currently on this. But one of my outputs from this is just at a very simple level, the most simple macro level is we go from the US having to get rates to zero, let's say.
Okay.
We have the ECB then having to do something more extreme, and we have the BOJ then having to go more extreme again, right? That's the typical pattern. So we end up with extraordinary world, whatever that is, MMT plus whatever, whatever it looks like. So you start to think, well, obviously Bitcoin and gold, both of them look like great options.
Yeah.
They're just options on something. I think Bitcoin has the potential to be the larger option for the reasons we say, because it's an option into, as I said, something entirely different.
But it's a different bet than gold.
Yes.
It's a different
completely
bet.
different bet.
Yeah.
And so that thesis for you holds up as well from a macro perspective, that if things get ugly and there's more central bank largesse, then it's got to be a net beneficiary into Bitcoin.
Yeah, but I mean,
I know it's not your reasoning.
No, I think Bitcoin does its thing on its own.
Yeah.
Meaning that people will start to realize what I am realizing, what all the people in this space who are really committed, what they see. And so I think it's almost on its own. Yeah, it's helpful if rates go down. Gold will respond because, I think gold is interesting now because, most of the world just owns equities, and at least in America, but also in other places, lots of equity holdings.
Yeah, I really like the argument where Raoul was talking about, what happens from a macro position if the interest rates, keep falling. Bitcoin and gold, represent this opportunity to protect yourself from that and to profit from that potentially. And I really like Dan's position that, look, that may benefit gold, but that's not the investment thesis around Bitcoin today. And I actually agree with that, because I still think Bitcoin represents something so different to gold. Bitcoin is an emergent asset. It's an emergent money, as we sort of said, that I've said 1,000 times throughout this little video here. But irrespective of what happens in the economy, whether they cut the rates, whether they don't, whether they do QE, whether they don't, a lot of that stuff's irrelevant. And Bitcoin's just going to do its thing, and we've invented a new monetary system. So capital is just going to flow to this better monetary system, irrespective of what happens. There might be accelerators along the way. Maybe rate cuts will have a accelerating effect on people's desire to look for a non-sovereign form of money to store their value in. It may have a negative price impact. People might still broadly consider Bitcoin a risk-on type asset, at least the people who are speculating on it, and they might just dump it in order to cover other positions. We don't know, but again, echoing what Dan said here, is it doesn't matter. Like the thesis here and what's important is getting an exposure to Bitcoin and allocating something to Bitcoin, irrespective of what the hell's going on out there from a macroeconomic perspective. Game, set, match. I think he just really nails it.
And if equities go down, there's no hedge because the bonds can't really go much below zero. We've seen they can, but that's not a great hedge. If you're concerned about, if you see the drop, and for me, the most important thing going on now, macro, is this massive drop in prices. It was the ISM price component, and in the last 4 or 5 months, it's just gone straight down. I sent you that chart.
Yeah.
And that's a very scary chart. And it shows that, okay, now Fed is nowhere near their target, but everyone has misevaluated the degree of price compression. And the Fed knew it 6 months ago. We never got close to any target. So, that's the challenge, is how do you get to a place where you stop deflating? And, you have the web, the Amazon effect and all of that, which is talked about all the time. I mean, that's real. I think that's real. You have a home advisor thing. I needed a new air conditioning unit in the first floor of my house. And my guy, who I've had for 20 years, quoted me a price. I thought, that's crazy. I mean, that's nuts. I go onto the web, home advisor, the air conditioning guys who are in my area. I said the problem. Within 10 minutes, I got a call back. A guy gave me a price that was 15% lower. I just went back to my normal guy. I'm like, look, that's the price. And he basically said, fine.
49 minutes, 39 seconds. One of my favorite parts, man. Bitcoin will do well if, gold and the markets do this, and it'll do well if it doesn't. So, and then Raoul says, so either way, buy Bitcoin. That's the game.
It's going up.
I think so. I think it's just about, about having the time and patience and and just having the allocation and not being too cute about it.
Our rate's going to zero.
Well, I think they're going all the way back down. Maybe, right. I don't know if it's zero or whatever it is, but you know what I mean. At the round table in California, we had our favorite trade, and I said my favorite trade was the 2-year note.
Yeah.
And it's pretty much dropped, and I think Stan said he thinks he could see it down to 50 basis points.
That's right.
I mean, you don't have to listen to me about that. I mean, I think that's...
Stan's telling us. He's long. He's long. People like him and Alan Howe, they're all long Eurodollars, 2 years.
Well, and also, I think it was about a month ago, Paul Tudor Jones came out and said his favorite bet for the next 2 years is gold. That was, I don't know if you remember that. And And then it rallied 10%, and it's now at a 6-year high. I don't recall, Paul, I don't know him personally, but I followed him, and I don't recall him very often, at least, having a 2-year view, being that definitive, and saying one thing, this is for the next 2 years. So, of course, I can come up with my own reasons, and he has his own reasons, but I kind of think the two are linked. In a way, they're linked. I think you'll have more upside in terms on the gold because I don't think the 2 years are going below zero.
I do.
Okay.
It is everywhere else.
But they could. No,
they are everywhere else.
Right. They certainly could. And again, so recession, you can still have 1% GDP, but you could have, a 1% CPI will feel like a recession. A 0 CPI will feel like a recession. You still could have some growth. And I hate being so cataclysmic also about it because it can happen over a long period of time. It could be over the next 2 years.
I tend to actually agree with Dan's position about, Trump being the wild card with respect to what's happening from an economic standpoint, and the fact that, the markets and everything that's going on is just so interventionist at this point in time. They're just finding more and different ways to kick the can down the road. And the interesting thing that's happening in the world, again, is this creation, this development of Bitcoin. I think all that's happening on the other side of things is this game of musical chairs that, they're playing, and Yeah, I think there's very little interest on that side.
The one thing that I think is a little spanner in the works of that is that I think Trump is very aggressive. I think that the market probably has to be near its highs going into the election next year. So you might get a very severe dip now like you had in last December, and then a panic response. I don't think Trump is going to let it, and he could do lots of things. There are lots of levers that you can pull to push that off. Can we have an 2008 like collapse? It just seems a little less likely because we're so aware of that. December showed that, look, I mean, we've been talking about this in March. March of 18. China was slowing. They still have a big corporate debt problem. There's still a huge overhang. There are problems there now. The two-year rate of change of LIBOR, which was a phenomenal indicator. Anyone watching this should go back to your work and look at that indicator. You combine those two things. And remember, we were at, we were at a restaurant here in the city, and we hammered this out in March and April. And then you throw QT on it, and all of a sudden in December, boom. But what normally would have led to more of a wipeout, didn't, because there's so much intervention now in the traditional markets. I think that's why they're so boring compared to what's going on in crypto, because things are known. It used to be, it was a handful of guys looking at Fed policy in the late 80s and 90s, and now it's thousands, if not hundreds of thousands, and there's nothing there. Like there's no
edge.
Yeah, you can be long the 2-year and you can hold it. And if it's moving up and down month to month, you can't manage your P&L based on that. You have to hold it. I think it's a good view. But for the moment, until those 2 years get down to 50 bips stands level or 1%, I think the equity can still hang in there. So we don't go into, it goes down, but and especially into the election, I don't think we can go into that cataclysmic, it's all over, let's get rid of the fiat monetary money system, and it's too much. And these things, as macro always takes longer to happen than you imagine.
To get the right answer is actually not that difficult. To get the time of these bigger events, really hard.
Yeah, but I mean, look, you've done a good job, and I think that there are people out there who do it and do it well. And look, you've been right on this 2-year call.
Yeah.
And I don't think you suffered that much. You've been right on like the moments, and then you got back into gold also, I think, at the right time.
Yeah.
And now I think you can have that position.
Yeah, I think
until Paul comes out and says, "Okay, I'm done with it," or maybe before then.
Always before.
Before then, but I don't have as dramatic a view, because I mean, look, we would have, if in the 90s talking about Japan, we all thought, it was going to blow up, and I guess it has blown up, but it's taken. But have they felt it? Have we felt it? I mean, it's still this morass of, and they have companies there that are doing great things, and real estate is still relatively, expensive. And so, the 08 events, or I'll call 97, 98, Asia, and then those macro crisis events, they're just, we already all made our money on that. Like, we did that. Like,
well, you're saying it's the opposite. We've got the upside is the Bitcoin. That's complete regime change, much like 98 in Asia was. It was complete.
Right. I think it's
an opposite.
No, but it's a
upside.
Constant. No, it's a constant.
Does this mean that macro guys have to become optimistic?
No, I actually.
Optimists? That'd be extraordinary.
I think that they can shoehorn themselves into this and look, I think within 5 to 8 years, every single hedge fund will be trading crypto.
Yeah.
I mean, in some form, because what's going to happen is that there is going to be an entire system that hasn't been built yet that is going to grow up around it. For instance, the lending market. Sure. It's just started.
Custody.
There's going to be custody. There's going to be repo. There's going to be people who own Bitcoin. And one thought it'd be interesting to know what you think about this, but I'm starting to have this feeling that Bitcoin might actually not be the thing that gets spent and used, and that it might be something else.
Agree.
Because everyone in this space, May 22nd is Bitcoin Pizza Day, right? Everyone knows that guy spent 10,000 Bitcoin on 2 slices, right? And then you have Winklevoss also talking about how he paid for his galactic Branson flight with Bitcoin. And then at the conference just now, a guy said how he paid thousands of Bitcoin for a cup of coffee in the early days. So everyone who's bought or who owns, is hearing these, remembers these stories. It's like almost a meme, like, oh,
Never sell.
Right, you were
Never
the guy, who blew 1,000 Bitcoin on that. So, and I think that's okay. And that also contributes to the robustness and strength, right?
It depends what layers you build on top and the stuff around it.
Right, but I think that's all, and I don't just mean like the normal financial architecture, the lending and repo and the collateralization of Bitcoin, using it as collateral to be able to buy other things. I think that's coming also. So I don't know how it'll work. Maybe it is just Satoshis that end up getting transferred back and forth. Or maybe it is Litecoin, or maybe it is some, thing that hasn't come around yet. Anyway, I tell everybody who's under 30, if they're looking about something to do, or they're interested, what should I do?
This.
Do I go to a macro hedge fund? Probably not, unless you're going to be doing something interesting like this.
Brilliant. Look, it was a really good tour around some really big concepts, some good ideas, a bit of old-fashioned macro, the whole thing as ever.
This is what we do every week anyway. So, I just came in here to, see you face to face.
Perfect. So, good to see you, and we'll get you back
anytime.
When Bitcoin's at 100,000 next.
And gold at 5,000.
Yeah.
Okay.
So there you have it. I know it was a bit long. We had to splice in the episode of Dan and Raoul talking with my commentary, but I hope you found it informative. We're all in this Bitcoin journey together. Some of us are further ahead, some of us aren't. You see Dan and Raoul taking this Bitcoin journey, the hero's journey, so to speak. And I hope that some of the content and some of the ways I explain and describe things are going to help tighten not only their message and their understanding and perception of this, but anyone who's watching and listening to this. So I hope it adds some value to you. Like I said in the beginning, thank you for listening to this in advance, particularly if you've gone the whole way through. Really appreciate it. Audio version might be easier for this, so I'm going to chuck it up on all the podcasting things on Anchor. Subscribe if you like it. Give it a thumbs up. Share it around to your friends if you think it's of value, if you think it's going to help them along their Bitcoin journey. I'm going to do another video next week, which is going to be a bit of a rant on that stupid Twitter post that we saw last week, with that crazy lady going, oh, don't tease the altcoiners, about alts bleeding out because no one saw this coming. That's a total load of shit. A lot of us saw this coming. So I'm going to talk a little bit about toxicity and why that's so important. But I think I'll be in Latvia, so I'll try and do it between those times. Again, without ranting any further, thank you very much for listening to this first version, or this first episode of this first version of the podcast. Hoping to make it better and better as we go. Subscribe, share, do all that sort of stuff. But thank you very much.